I do want to give you a preview into this topic because I think most folks are really familiar with public equity, investing in the stock market. Well, there's a whole other world called private equity that, in fact, the rich allocate almost half of their portfolio to private equity investments. So I want you all to know what that is, how that works, and even how you might be able to participate.
Welcome to the Secrets to Abundant Living podcast. Your guide on this journey is Amy Sylvis. If you're ready for the secrets to an abundant life, hit that subscribe button now, and let's get started.
Secrets to Abundant Living podcast community. This is your host, Amy Sylvis. Welcome to another solo episode where we're going to be talking about financial abundance. I hope you all have had a great week. I know we've been putting out lots of great guest episodes. I hope you've enjoyed those. And I always love spending time with you all one-to-one on these exciting financial abundance topics. For those of you who may be new to the podcast, as I said, my name is Amy Sylvis. I am the founder and principal of Sylvis Capital, a real estate private equity firm. And here at the Secrets to Abundant Living podcast, we believe that money is not the end goal. Rather, the end goal is abundance in any area of your life that you choose, whether it's time with family, enjoying your hobbies, contribution, taking care of your health, building relationships, giving back, everything and anything you can imagine, enjoying your hobbies, or simply having a completely free calendar, free of obligations and meetings that you have to go to, but instead that you want to go to. So we believe the way to get to that abundance is through hands-off income. One of the ways is what I personally do, as I mentioned, hands-off income in real estate, but there are really many ways to get there. And so we use these solo episodes to talk about the vehicle of hands-off income, the vehicle of investing in something or generating income that you don't have to trade your time for. So we have a really interesting topic today, and candidly, something that I didn't understand well into my adulthood, especially how I understood it could be applicable to me growing up in an average middle-class household. And that is this topic of private equity. Tony Robbins recently wrote a book about private equity that I really think is worth reading. We're not going to do a book report here specifically, but I do want to give you a preview into this topic because I think most folks are really familiar with public equity. You think of investing in the stock market. Well, there's a whole other world called private equity and investments there that, in fact, the rich allocate almost half of their portfolio to private equity investments. So I want you all to know what that is, how that works, and even how you might be able to participate. So hope you're excited. I'm really excited to let you all know about these topics. I wish more people helped me understand. I understood what private equity was, but really how it could be accessible to me before I was able to tap into it the way I was in my late 30s. So I'll start off by giving my disclosure. I do not give investment advice. This podcast is simply education. I'm excited to share what I know, share what I hear from other high net worth individuals, and expose you all to what you may not have learned through your family, through your formal education, and through the media. So and the other disclosure, of course, is that past performance doesn't predict future performance. That's a big Captain Obvious. But it's really worth noting that everything we talk about, if and when we talk about numbers, it's just simply how things have performed in the past. That doesn't mean that they'll perform a certain way in the future. So I can take off my Amy lawyer hat now. No. I think those things are worth saying, right? It's not just a CYA, but it's really to make sure you all understand, the facts and how best to utilize the information. So I want to start off by saying the wealthy say, this isn't from me, this is from their words, that they've experienced superior investment returns in private equity versus public equity. So we talk about stocks, bonds, and mutual funds. versus private equity. They say themselves, and I'll give you some quotes, why they invest in private equity is these superior returns. And as you know, just a few percent difference in returns can result in dramatically different results compounded over decades. You may remember a previous podcast where we talked about the difference between earning 10% on your money annually versus 20% on your money annually over a 20-year period of time. So just to refresh your memory, 10% compounded over 20 years, if we invest $100,000, is $672,750. Fantastic, right? I don't think anyone would think that that's awful. I think that's really, really good. But what happens if we chart that up to 20% return compounded over 20 years? $3,833,760. That is a difference of almost 3.2 million. Woo! That's a big difference. So now you may be able to see why the wealthy, again, past performance does not indicate future performance, but why the wealthy allocate over half their portfolio to private equity. So Tony Robbins' book that I mentioned is called The Holy Grail of Investing, where he really talks about the different types of investment opportunities, how the wealthy are able to not just keep their money and protect it, but grow it. And he talks about this trend of private equity and why high net worth individuals decide to invest in it, what results they get, and a bit more information there. But I want to give you, a high level summary. So hopefully it'll whet your palate and get you to look into this more. So what the heck is private equity? You may be asking yourself. Private equity refers to capital investments made in companies and assets that are not publicly traded. So again, you think if you invest in Google, that is a publicly traded stock. You can invest in that through your broker. Private equity is something you have to find, you have to have the opportunity to invest in, you have to be exposed to. There isn't this public market where every private equity opportunity is just available and visible to everybody. Quite the opposite. Quite the opposite. So, as I'm sure you all do too, or I hope you do, I watch those who are far more wealthy than I am, and I notice how they allocate their funds. This is another Tony Robbins quote: "Success leaves clues," right? So it's no mystery if we want to grow our wealth, if we want to really juice up this vehicle to having more abundance in our life in other areas that matter most to us, really understanding what the wealthy do can serve us quite well. It's served me quite well. And the truth is, access to private equity used to be quite difficult for the average person. And that's probably part of the reason you don't know about it, but I promise you it's not the whole reason. I'm deciding whether or not to go there. I'll touch on this. How's that? I've mentioned this earlier, but it's very important to understand how people make money. They give you investment advice. So if you have a financial planner, are they making money based on what they tell you to invest in? Many of them do. Many of them have an assets under management type structure, and they make money off of that. But what if your advisor tells you to invest in something that he or she can't make money off of? Surprise. They may not recommend that to you because they want to make money off of it. Private equity is much more challenging to make money off of. Doesn't mean it can't be done. It doesn't mean that financial advisors don't recommend this, but I'm just giving you a little bit of a flavor as to why you may not have heard of how much more accessible private equity is now to the average person. I'll say another caveat. There are definitely financial planners who operate on a flat fee basis. Their advice is more likely to be objective and not based on their own financial incentives, but I digress. I just want to make sure you have some information about why, this area that could be helpful to your portfolio, maybe you haven't heard of as much as you should have. So anyway, access to the private equity has actually improved substantially over the past decade or so. And we'll talk a little bit more towards the end of this episode why that is. But let's give you some examples. So I've said some pretty bold statements about returns here, but what do other people say? Have you heard of CalPERS? It is the largest public pension fund in the country and manages $372.5 billion with a B, billion in assets. So almost 400 billion in assets. CalPERS is a behemoth, right? Guess what they announced in March of 2024? This is a quote. Quote, moving to seize market opportunities and maximize returns from the highest performing asset classes, the CalPERS Board of Administration approved a proposal to raise the portfolio's investments into private markets. CalPERS is to increase its holdings in private markets by more than 30 billion with a B and reduce its allocation to the stock market, and bonds in an effort to improve returns, end quote. That's CalPERS. So they are moving, if you didn't hear the quote right, from stock and bonds to private markets. Why? They said, and I quote, in an effort to improve returns. Fascinating, right? So here's another quote. A proposal to increase the $483 billion fund's position in assets such as private equity and private credit from 33% to the plan of over 40%, end quote. So that's a pretty big move. They're going to have over 40% of their investment in private equity and private credit. Success leaves clues. Now, again, I'm not telling you how to allocate. I'm not telling you that this is where you should park your money. You all are smart. You all know how to do research, but you can't do research and make decisions if you don't have all the information. So I'm providing you with the latest news and information so you can decide based on your goals, your investment goals, your time horizon, and your risk tolerance, what might be best for you. One more quote from CalPERS, direct quote. The CalPERS Investment Office conducted a mid-cycle asset allocation review and concluded that private equity remains the asset class with the highest expected long-term total return, end quote. Woo! So translation, CalPERS believes that private equity, an alternative investment class that invests in or acquires private companies that are not listed on public stock exchanges, will provide the highest expected long-term return. That's a big deal. So what are some examples of private equity? Venture capital, real estate fund, leverage buyouts. There are all sorts of different examples of private equity that you can explore. And you better believe CalPERS is exploring it. But the great news is that it's never been easier to allocate some of your investment portfolio the way the wealthy do. Because the wealthy aren't 100% in stocks, bonds, and mutual funds. I'll tell you that. Tiger 21 is an organization of ultra high net worth entrepreneurs, investors, and executives. Again, repeat after me, right? Wherever you are, say this out loud. Success leaves clues, right? If we want to be the wealthy, we might want to learn at least what they're doing. So how do these ultra high net worth folks invest? We already know how the world's biggest pension fund or the United States' biggest pension fund invests. But what about these ultra high net worth individuals? Well, here's their asset allocation. This is all public information. They have 29% in private equity. Again, private equity is the alternative investment classes that invest in or acquire private companies that are not listed on a public stock exchange. 27% in real estate. Hint, it's not just the houses they live in, by the way. And 19% in public equities, which are stocks and bonds. So how does your portfolio match up with how the ultra wealthy invest? What does that look like for you? And again, if it's different, you may say, hey, Amy, this is the reason it's different. I have different goals. I have different priorities, and that's perfectly fine. This episode is not to try to get you to change, but all of us would be remiss in all aspects of our life, including our goal of reaching financial independence, to understand what else is out there and spend time educating ourselves. So many investors that I talk to don't know that they can invest in private equity, let alone what the heck private equity is. So now you know, right? You're part of the know. You can spread the word. And I myself, as I mentioned at the beginning, I run a private equity real estate firm where I invite folks to invest alongside me in commercial real estate buildings. Now, this isn't a REIT. REITs are stocks pretending to be real estate. I posted about REITs on LinkedIn today. Today's Saturday, August 10th. So there's nothing wrong with REITs. REITs have their own benefits, but REITs are not private equity. So my investors and I have direct ownership of these real estate buildings, completely different than owning a stock that represents ownership of a company. And the really, really cool news is your retirement plan can also invest in private equity. If you're looking to, especially given the volatility of the stock market over the past few weeks, if you're looking to not have all of your retirement dependent on paper assets like stocks, bonds, and mutual funds, you can actually invest in private equity, not just real estate private equity, but a whole bunch of other things with your retirement account without incurring fees or penalties from the IRS and without creating a taxable event. So I'm actually going to do something a little different. I'm going to invite you to a masterclass, a live masterclass we're hosting on Thursday, August 15th, so just in a few days, that will let you know the 5 easy steps to use your retirement account to invest in private equity. So I'm going to put the link in the show notes. You all can register there and you can join us live to learn. And again, maybe you're perfectly fine with your retirement being 100% in stocks, bonds, and mutual funds. I'm cool with that. I'm not going to try to talk you out of that at all. But at least do yourself the favor of just getting some education around what is possible. I think it's so empowering to say, look, maybe it's not for me, but at least I know what my options are. Because if you don't know what your options are, then you're not sure if you're making the right decision, right? So even in real estate, I'm always educating myself. I think I've done quite well for myself and my investors and my family in real estate, but I'm always learning more intentionally, even if I'm not looking to do anything else. It's just this state of mind, right? It's that abundant state of mind of, yes, I'm always going to fill my brain with new information. I'm going to be open-minded. I'm going to see what else is out there because you don't know if something might fit your goals unless you learn about it. So that is my invitation to you. It's completely free. We love giving education. We think this might be beneficial for some of you. So hop on in and enjoy it and join us. A little tongue-tied today. I hope you enjoyed this episode about private equity. We've really just scratched the surface. But again, my job here on the Secrets to Abundant Living podcast is to expose you to new ideas that you're not already hearing about from the press, from your family, from formal education, because there are other things out there. And if your goal is to design an abundant life that is not like most people's, you may want to educate yourself on tools that can help your financial freedom vehicle of creating money, maybe that's hands off. Educate yourself on things that other people aren't doing, but maybe the wealthy are, maybe the ultra high net worth individuals are. All right, y'all, this is a lot of fun. I'm really passionate about this topic. I love the fact that this private equity space is so much more accessible to folks than it used to be, kind of the democratization of great asset allocation, if you will, of great asset opportunities, asset investment opportunities. But this has been a lot of fun. If you enjoyed this episode, please send it to a friend. Every single person listening to this knows somebody who could benefit from exposure to learning about private equity or joining our masterclass on investing in private equity in your retirement account on August 15th. So go ahead, forward this episode to somebody because sharing is caring. And if you haven't already left a review, please do so. Please leave a comment, give us a 5-star review. It helps us so much. This is a mutually beneficial relationship, just like all great relationships are. I do my darndest to try to make these episodes helpful, informative, fun even. And the way you can show your support in return is to really leave us a review. Have an incredible week, y'all. I'm excited to present to you new information coming up next week. And we'll talk to you soon. Have an abundant day. Bye, everyone.
Thank you for joining us on another episode of the Secrets to Abundant Living podcast. We hope you found inspiration and valuable insights that will empower you on your journey towards abundance. If you enjoyed today's episode, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us, and it helps others discover the secrets to an abundant life too. Stay connected with us on LinkedIn, Amy Sylvis. Keep striving for your goals, nurturing your relationships, and embracing the adventure that is life. Until next time, we wish you an abundantly fulfilling day.